Hello everybody, I'm John, this is JP Strategic Investments, and today I want to talk about Palantir Stock. And some of you guys that are in my Discord server may know that back in September or so, I started a very small position in Palantir, added a little bit, but then sold out as I consolidated kind of going into 2022, kind of just looking to get to my core stocks. And I made a video about actually what my strategy is at the moment. You guys can check that out in the info cards above, but at the moment I am only in 3 stocks right now: CrowdStrike, Tesla, and Patriot One Technologies. But I'm really tempted to get back into Palantir, especially at the stock price that it's trading at right now. They just reported earnings and it actually dropped another 15% or so, and now the stock is trading at under $12 a share. To me, that's really undervalued. Now, there are a couple things with Palantir that they do have a lot of stock-based compensation, and currently that's actually the only thing keeping them from being profitable at the moment. If they were not paying the stock-based compensation that they currently were, they would have actually had a profit this quarter of about $10 million. Now, with Palantir, if you're not familiar with the actual company, just to give it to you in a nutshell, basically Palantir is almost like a data analytics company, but that's really not doing them justice. Basically, companies go to Palantir in order to use the data that they currently have to improve their business, and usually to greatly improve their business. If you own a business, you know this. Companies and businesses have all sorts of data that they're taking in. They have their website, all of the visitors that come to their website, what the demographics are of all of those users. I have that same thing with my YouTube channel. I have all this analytics on who's watching my videos, how long they're watching my videos, right? At what point during my videos, maybe when I say certain things, do views start to drop off or do views start to pick up? So these businesses have all this data. And, you know, with my YouTube channel, for example, I can look at that data, and obviously as an investor who analyzes all of these different companies, who's been pretty successful at it, I'm pretty good at it, and I can make certain assumptions. I can look at, you know, all of those analytics and try to make certain adjustments and changes to my YouTube channel in order to improve it, right? Provide more value to you guys as the viewers, and hopefully get more subscribers, get more views, and grow on YouTube, right? But I am inevitably going to miss a variety of things within that data. Whereas AI, artificial intelligence with all sorts of algorithms built up from a company like Palantir, who knows how to analyze that data and has a ton of experience doing so, their software is going to be able to analyze that data far better than any human is going to be, and from what I can see, far better than most other data analytics software. And so for a company, that provides a huge amount of value. All of those different insights can help all sorts of different companies improve their business and grow much faster than they're currently growing. And so it's a huge return on investment. It's a huge value proposition. And I think that going forward, we're only going to go more in that direction of data analytics, of all of this stuff. Everything's online now. There's more data than ever, and data is becoming more and more valuable. And companies are going to need technology and software and companies like Palantir in order to stay ahead of their competition, in order to grow and thrive in a data-rich environment. So that's why I am very bullish on Palantir as a company, and obviously because of a lot of the things that I'm seeing with the financials. You can see on my screen right now, revenue growth was 41% in fiscal year 2021, and specifically US commercial revenue was up over 100%. And so I look at this company and it really fits my 3 kind of main things that I'm looking for that I mentioned in my strategy video for 2022 with the stocks that I'm looking for, right? This is a stock that has been beaten down significantly, right? It's down well over 50-60% from its highs back in October. It's also a very high growth company. You just saw with that revenue there, right? And it's a company whose products, whose services, I think are going to be in very high demand going into the future. Now, I do realize there are some risks with the dilution because of the stock-based compensation structure that they currently have. But we actually got to hear on the earnings call that we just got this morning, the CEO kind of talk a little bit about how that stock-based compensation is expected to play out. And so I just want to play you a small clip of that and then really quickly give you my opinion.
The thing to understand about Palantir, and then I want to just hit this, is like, it's actually not the result of the DPO. It's the result of the fact that we were completely focused on building product. We had no earthly idea we were going to DPO till like right before we did it. And so most companies are, I mean, quite frankly, built so that when analysts look at it, the primary customer of most software companies is not the client, it's the software analyst. So it's like we obviously, our primary client are our clients, which doesn't mean, now we're thinking about how do we expose the data in a way that, people on the outside like you and professional analysts and others can look at the data and get a better sense of what's tracking and what's not tracking. But then you get to stock-based comp, which is like, okay, so there's two parts of it. Of course, IRI people kind of don't want me to do any kind of forward-looking math, but if you're smart enough to invest in Palantir, you're smart enough to figure out there's essentially there's the how are we comping people, and there will be a normalization that will get us into a range where you would see in a software company within the next 18 months, latest 2 years. But there's essentially, and that's going to take a little time. It is going to happen because it's also very much linked to another question, which is how do you actually run the company so it's profitable someday on a GAAP basis, not stripping out comp, and that is also within eyesight. And those are goals for Palantir because same reason we have no debt, same reason we have $2.3 billion on our balance sheet. This is a company built for bad times.
So basically what he's saying here is that because it wasn't part of the plan, it wasn't the goal to really do a public offering, even though that's actually what they ended up doing. Obviously, they're on the stock market now. Because that wasn't the goal, because that wasn't what they were working towards, the structure of the business and the way that their compensation was with the stock-based compensation was not geared towards attracting new investors because it wouldn't necessarily be beneficial to them. And so now that they've gone into this public offering, they're reworking that structure of stock-based compensation to make the company more attractive for new investors. And as he said there in that clip, it's going to take another about 1.5 to 2 years to really get their stock-based compensation on par with the levels of comparable companies, of other companies on the stock market, where it's really a much lower level of stock-based compensation that's going to allow them to be profitable on a GAAP basis and to grow those profits consistently into the future. And so for this reason, what I've decided to do with Palantir Stock, my strategy going forward, I've actually started to implement the beginning of what is a strategy called the wheel, and it's an option strategy. And if you don't understand options, I apologize. At the moment, I'm not going to go through and explain all of the intricacies of how this works, but basically what it entails is at the moment I'm selling puts on Palantir Stock. I'm selling them around the $10 level. And so basically what this means is if the stock stays where it's at or pretty much goes up from where it's at, I will just continue to collect the premiums on those options. At the moment, I'm selling them at monthly expirations, so every month I'll just continue to sell those options and collect those premiums. If the stock continues to rise from here, maybe I'll increase the level, maybe I'll start selling them at the $11 range or the $12 range as the stock continues to go up, and I'll collect those premiums. And at a certain point, I'll probably stop when the stock reaches a value I think it's more fair valued at. If the stock drops, though, to that $10 level, then I will be willing to pick up those shares and let those put options be exercised. When I pick up those shares, I'll then start to sell covered calls. In this way, what I'm doing is allowing myself to collect premium while they're restructuring the company, while the stock may not move higher over the short term, and allowing myself to get some income from that and hopefully build up some shares so that when the stock does start to move upward, my shares will begin to appreciate in value as well. So to recap, at the moment, I'm not actually buying shares, but I am selling put options, and I will definitely be willing to pick up those shares if the stock drops to that $10 level. Currently, I may dip my toes into some long-term call options, and depending on how much income I'm gaining from selling those put options, I may put some of that income to use through buying longer-term call options in the stock, or maybe some shares even before it gets to that $10 level. But that's kind of where I'm at right now, what I'm looking at, and my thoughts around Palantir stock. If you're thinking about Palantir stock, or you have other comments or questions about it, definitely leave those in the comments below. Other than that, I will see you guys next time, and have a great day.